What is going on, guys? Welcome to another educational video here on my YouTube channel, Forex with Cody. And today we're going to be looking at gold and that move that happened last night during the New York session and how we could have looked to take advantage of that move and get into the market using simple price action concepts. So looking at the chart here, the move that I'm talking about, and you guys can see this if you go to your gold charts right now, was this move, this sell-off right here that happened during New York session last night for about, from top to bottom, about 270 pips, right? First of all, as always, where we want to start and where I start is the weekly time frame, okay? And the weekly is going to tell us everything we need to know, because if we look at the most recent weekly price action here, look at what is happening, right? We have this strong rejection that created all-time highs up here, kind of the start of July, right? 15th of July, up at 2483740, all-time highs right there. We spiked out, flipped bearish, left a huge rejection, and then we started selling off. And what was important about that, and this is why I've been bearish on gold over the last couple of weeks now and going into this week, is the fact that if you look at the structure that was formed here on the weekly time frame, going up, creating this all-time high in this bullish structure, was higher highs and higher lows all the way up. And then what happened is this level right here, which was the most recent higher low in the market in that uptrend, got broken last week. And more importantly, the weekly candle closed below that low. Okay. Now, if I'm just if I just mark out the low right there, right, and now this is important as well, mark out the low to the body, this is going to be the level that we're looking at this week, and that level that we was looking at yesterday, hence why we got the sell-off. And most importantly, what we want to see first of all is simple price action. Now, if you have a look at every candle, whether it closes bullish or bearish, the things that you want to see first of all is if the previous weekly candle closed bearish, what we want to see for that new weekly candle when it opens up is that it flips bullish first of all, creates that top wick. Because if we have a look at previous price action in here, once this candle closed bearish, what did this candle do right here? It flipped bullish, created a top wick, and then it drove bearish and closed bearish, right? And now the same thing is happening here. We've opened up, we've flipped bullish, created that top wick. Now we've flipped bearish and we're driving, and we're going to be, looking at price coming down into those previous weekly lows over here and breaking those and potentially continuing bearish, right? That is very, very simple price action. Okay. Now let's have a look at this level on the lower time frames. Let's have a look at the 4-hour time frame. This is the 4-hour time frame, right? And if we turn on the sessions indicator here, we can see that where we turn purple, the background is purple here. This is yesterday market open, Monday market open, right? And important that the weekly and daily candle creates some kind of top wick first of all before we start driving, and that is exactly what happens. Here's the market open, price pushes up into that area. You can see one rejection, two rejection, and then the 4-hour candles start flipping bearish, right? And again, what we're looking at from the weekly perspective, right? How this weekly candle broke that bullish structure of that previous weekly candle, creating the higher highs and higher lows coming up. Now we're looking for the same thing on the 4-hour time frame, right? Because if we look at the 4-hour time frame, all the way from Friday, right, on gold, we got the lows, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, right? Bullish market structure going all the way up back into that level. Now, what happens most importantly from there, again, is that now we break structure on the 4-hour time frame, right? Because that is the most recent higher low right there in that bullish uptrend that has now been broken. So that's a break of structure to then potentially flip price bearish and create that bearish market structure, what we have seen after that price coming down, right? So there's that break of structure. And what you want to see is a retracement, right? So you broke the structure, you want to see a retracement, and you want to see some rejection upon that retracement, right? And if we go into this, this is the level that we got from the weekly time frame, this box right here. If we just go into the rectangle settings and we put on the middle line right there, this is a level we could potentially use as well, right? We can potentially use that level to see if price reacts to that. In this instant, it doesn't. That's why I left it off, but that can be for another video in the future. But other techniques, very simple techniques, right? I'm sure you guys have all heard of Fibonacci, right? And what you want to do is, this is the break of structure candle, right? Because this is the last candle that formed that bullish structure in that bullish uptrend. And this is the candle that broke it, right? Broke that structure, creating that bearish structure or potential break of structure, price to flip bearish. What you want to do is grab your fib and you want to mark out this last candle, right? The last candle in the uptrend, because this is the candle that created the lower highs and the lows, which then got broken, right? This was the candle that decided the break of structure, okay? So we're going to mark out, because it's bearish, we're going to mark out the highs to the lows, because now we're looking for that swing the downside, right? But we need retracement first of all. So what I'm going to do is mark out then the 62 to the 50, okay? I'm going to mark out that. I'm going to change it to right there. So now we're looking for price to come into this zone. Purple, maybe? Yeah, that's better. So now once after this candle, so we're waiting for after this candle, this is the break of structure candle. We're waiting for after this candle closes now for price to retrace back into this area, right? To look for entries for that sell-off, which is exactly what happened. So if we go down to the 1 hour, 30, 15, I personally like the 15-minute time frame. It's my favorite time frame. We can see now that this is the 4-hour low right there, right? That broke the structure. So here we can see the break of structure right here, the retracement. But on this break of structure and retracement, we don't see that pullback into this zone, right? You can see if I zoom in right there, price doesn't come into this area, not much volume. So now coming into the New York session, which is when gold, can obviously it's a USD pair, New York session, a lot of volume and liquidity can come into gold during that New York session. And what happens again is we come down and spike out the lows again. So there's the lows, we spike out again, right? We come all the way back up again into this area. We grab that liquidity out of these highs now, because the price was creating this resistance, this double top. We spike out of all these highs, grab the liquidity in here, tap into that Fibonacci zone, right? And we start selling off. Once you get a bearish closure there, that can be a break of the low. So there's your bearish closure is right here. There's your bearish closure, right? Bearish 15-minute closure. And that once we've tapped into the Fibonacci level, and then once that next 15-minute candle, so this one right here, so there's the tap in, the bearish closure. And then once this candle right here starts breaking the lows over there of that bearish candle closure, once we tapped in, you can enter the market right there, anticipating that price is going to come down. You can put your stops above that 15 or just above the fib level right there, and anticipate that move 1 to 2 and a 1 to 3 risk to reward for about 212 pips, right? But very simply put, you have the break of structure on the weekly. You then have the retest of that weekly level. You're then waiting for a break of structure on the lower time frame. So the 4-hour time frame is the time frame you happen right here. Price broke that structure, came for a retracement, didn't quite tap in. So there we can see once it started selling off, it didn't have the liquidity. Once we then came to New York session and finally came back for a tap into that zone, you can see we grabbed liquidity above all these highs, because there is the highest level in the market right there. Once price broke structure, come and spike out, grab liquidity, tap into that Fibonacci area, close bearish. The next 15 starts breaking the lows of that bearish closure, and we start selling off heavy there, going into that New York session. And that is a very simple way, using multi-time frame analysis, top to bottom, weekly into the 4-hour. On a lot of occasions, I will also use the daily time frame as well, but in this scenario, I didn't. But the weekly down into the 4-hour, down then into 15, looking for your entries. You can also use 30 and hourly for your entries, but I generally self prefer the 15-minute time frame. It's a beautiful time frame. It gives you beautiful entries, beautiful setups. But yeah, that is how, you know, I would have caught and how you guys could potentially capture these moves from the weekly perspective, right? And that's why we got such a big move right here on gold without news, right? Over a 200 pip move, because the move actually stems from the weekly time frame, but we're breaking it down onto the lower time frames, trying to get those sniper entries, trying to get those pinpoint entries into the market with a low stop loss and a high risk to reward. And that's why we saw that big move there, because it's from the weekly. So if you can start to analyze the weekly time frame consistently and go down to your lower time frames and understand how you can get into your entries from those lower time frames, you can capture big moves here on gold. And I hope you guys enjoyed that video. Leave a like, subscribe to the channel. We're on the road to 5k, as you can see down below. We're getting close. I go live Monday, Wednesday, and Friday on YouTube, trading gold live, looking at other pairs also and doing some analysis. Come through, say hello, and I'll see you guys in the next video.